So first things first, let's get into what automated trading actually is. It sounds almost like too good to be true sometimes, but I guess it's like the Tesla car that drives itself, or playing on your computer and something happening, or everything that we do around modern technology these days is simply code, right? And automated trading is no different, right? So the term used for the file in automated trading is an EA when we're using MT4 and MT5. EA stands for expert advisor, bit of a strange name, but that's what they're called. So if you see the word EA, they're referring to an automated trading strategy. There are other languages available, so we also have a TradingView strategy. They use Pine script, so you're able to create a mechanical, systematic approach to trading. Then you can verify that against data very, very quickly. And this is one of the key parts, but we'll get onto the pros and cons for that shortly. So everything is code. So ultimately what that means is a trading strategy can be created quite simply. Whether or not that means it's any good is clearly for the testing part of creating an EA to decide. But ultimately, a trading strategy or an automated trading approach could simply be something like, if A, B, and C happens, then enter the trade, right? And A, B, and C can be numerous things. We've got strategies with 5 different ingredients or confluences in it, and others with less. But that could be, if an EMA crosses over a 5 and a 10 and a 15, then let's enter a trade. And once that trade's entered, a stop loss could also be based around, the last high or low of the last few candles, or it could be based on ATR, which is the average true range and the volatility measurement of that pair at that time. We like to use that approach because it allows for that movement at that time, and it gives a rules-based approach to that entry and exit. Same with the take profit. Maybe there's a pip target or an ATR target, and there are various different ways, and very quickly you could create a strategy. Now, at the press of a button, you'll know very, very quickly if that's profitable or not, which is also the other benefit of auto trading. If you were to be manually trading, it would take you probably months to backtest one pair over the course of 2 or 3 years, whereas at the press of a button with some code, we can see straight away if that equity curve is profitable, and also test various different parameters very, very quickly using MT5 or whatever strategy tester functions that you can use. But yeah, this can be as simple or as complicated as the strategy dictates, and usually traders that are profitable have got a trading plan and a rules-based approach anyway. Yes, if you're trading technical analysis, then there's a lot of subjectivity and discretion in that. It's how you can translate any subjectivity and discretion into a rules-based approach if that's what you do. But otherwise, there are various other mechanics that can be used to do that. The first thing, it all starts with an idea, it all starts with a concept, it all starts with a bit of a shorter term look to see if this works. It's really important then to not get something that we call outcome bias, which we could look at a trading strategy over a period of a week or a month and think, oh, this is a great idea, this works lovely, code it, and it doesn't. You just had a good week. Probability played out that week, but it didn't play out over the last 3 or 4 years or whatever. Yeah. So the other key part of auto trading is that it runs all the time, so you don't have to. So you don't have to be glued to your screen waiting for that entry, being reactive to the market. If a trade is valid, that trade will open itself whilst you're asleep, having tea, taking the kids out for the day, sat on the toilet, whatever it might be. One of the key benefits of auto trading is, it sounds like a cliche, but Warren Buffett says it himself, make money whilst you sleep. Well, if trades are valid whilst you're asleep, if you've got an algorithmic approach to trading, then that trade will open itself, which is really, really key. This discretion and subjectivity, you can't code that. You can't code the fact that I might see X or Y pattern on a chart, but if I get Tom or Fred, they might see 2 completely different things. And with technical analysis. I traded technical analysis for probably 10 years, and I made massive strides forward when I switched to an algorithmic, systematic approach like this, because I found confidence and discipline in the data. You know, once you have data and time, that's where knowledge and confidence and belief comes from, which enables you to then stick to that plan, because really you've seen it all before. Yeah, if you hit a losing run of 3 or 4 trades, I'm pretty sure you go back through the data and the testing, and that's what you've seen before. So you can plan for it once you've got knowledge and understanding in the data.